please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. We've got 15 minutes to go till trade closes out on budget day, and it's not looking very good, specifically for two indices, the Nifty Bank and the Mid-Cap Index. And the Nifty Bank, Anuj, now, ICICI Bank, Axis, most of your names, there are sort of, decent cuts that are coming in.
Yeah, it's weekly expiry play, which is clearly happening, Surabhi. And, as we discussed, 27,300 once gave way. Now it looks like 27,200 is also possible. And, my sense is if you have sold puts at 27,200, right now you're thinking whether to cover or not, because the price is still about 10 or 12 rupees. But the move is happening now. Of course, it will be the weighted average price. But if it makes a move towards now 27,150 or below that. But, this is budget day. And that's why, they say that don't trade on days like today. Protect your capital. I think the mature reaction will come from tomorrow. But Ashwani, your thoughts and your BTST calls?
See, you can't say the reaction is very clear. Obviously, the market had the potential, the news had the potential of breaking the market down, which it didn't. But you can't also say that people are waiting for this dip to happen and they jumped in and they bought all over. So we are still range bound like we were yesterday and the days before that. Now, from tomorrow, we have the high and low on the Bank Nifty as well as the Nifty in place. So in case one of those boundaries gets taken out, that's the way the market could be heading, because there's nothing in advanced decline. Mid caps have not reacted well to, whatever news they were expecting. So something isn't adding up, and that'll probably need a few days of settling down. So that way, I would call it a draw between bulls and bears. Nobody really has won. As far as individual stocks are concerned, ICICI Pru is a buy with a stop of 420, target of 445. JSW Steel is a buy with a stop of 396, target of 412. And iShares is a buy with a stop of 27,800, target of 28,250.
Yeah, it's been a delightful day for Eicher Motors, otherwise one of the biggest laggards of the month of January at least. Mitesh, your thoughts, 15 minutes to go, trading ideas now?
Mitesh?
Yeah, I have two buy calls. Bajaj Auto finally appears to be closing above the levels of 3,400, and that's the breakout. So take a BTST trade with a stop at 3,380 for targets of targets of around 3,485. And Siemens is a conditional buy if it starts getting past 1,325. By then with a stop at 1,308 for targets of 1,360.
Okay, by the way, Jain Irrigation is the biggest loser. Talk about budget day, farm focus. That happens actually with Jain Irrigation. So ending down about 8% on that stock. 10.5% actually lower on that right now. Ms. Tulsian, before we thank you, thoughts on Jain Irrigation and this big crack that we're seeing now on the stock?
See, maybe the neutral effect that nothing specifically has been seen having come in the case of the micro irrigation, but I think food processing has been given a fillip, and Jain Irrigation is having one division and they are planning to monetize that either by IPO and all sort of things. But the kind of run-up which we have seen ahead of the budget, probably the positions are seen getting liquidated now, the long positions being held by but I don't think that this stock deserves much weakness from here, even from budget point of view. Probably at these levels, one can think of buying the stock maybe with a short-term view of about a couple of months as an investment.
Okay, all right, Mr. Tulsian, thank you very much for joining in and sharing your thoughts on the budget and individual stocks and sectors with us. Our next guest on the budget special lineup is Indrajit Bhatia of Macquarie. Indrajit, good to have you on with us. Your thoughts? Everybody's wondering that this market seems to have taken the LTCG blow quite well. So do you see the bulls continuing to be in charge then?
Hi, good afternoon, everyone. I think the budget day has come and gone, and it basically turned out to be a kind of almost like a non-event. It was a political statement made along with the statement of accounts with nothing significant positive or negative coming out of this. I think on the LTCG, the markets was kind of getting prepared or worried about something more draconian coming. And I think a 10% tax on with grandfathered up to 31st Jan is something that we can very easily live with. So I think that's what the market is relieved about. Even the fiscal math, which was another big important thing, which was people were kind of looking at, that is also not too bad at 3.3% fiscal deficit. Markets can live with that. So I think it's a draw, as one of your earlier speakers was saying, nothing much out of budget.
Nothing much out of budget. Indrajit, good afternoon. So from here on, budget we all know in the past has been a one-day affair. So from here on, what would be the investment approach?
I think going forward, going back to fundamentals and some of the global factors which are going to be extremely key to watch out for. I think what is happening with the US yields, interest rates, currency, they're going to have fairly important impact on the markets. Our global view is that the dollar will continue to weaken for some more time. That will bring in more liquidity into the emerging markets and other risky assets. That should be positive for Indian markets. We are going through an earnings season which is which has been fairly okay. I think a lot of high frequency data and indicators seem to be pointing towards some early signs of cyclical upturn. So I think that is where the market would kind of behave with a slight positive bias. Obviously the risk is where with mid caps, valuations at premium to large caps. So there is potential downside with the mid-cap names. So we would recommend one sticking with the high-quality large-cap names.
Okay. By the way, we've been discussing a lot of the unwinding in mid-caps. Must, of course, keep an eye out on the insurers because A, there was relief. There was no move to tax them at the same rate as corporates. That's still working very well in favor of stocks like SBI Life Insurance, 7% higher. Some of the others, ICICI Lombard, New India Life. So generally, insurers are a good space in the market today. Prakash, your thoughts on this space and on NBFCs in general, now that we are back to sort of regular life, what next?
Yeah, so, out of the BFSI basket, I think two categories stand out very well. One is people who expressly are in the affordable housing lending business. Yeah, so that's one of the reasons why you look at the likes of Hoodco and all are still holding very good ground. I mean, not very great stocks, but the price indicates otherwise. And the second is the MFIs. With so much of money coming into the rural economy, the propensity to use leverage goes up because you start looking at setting up businesses, small vocational professions turning into business opportunities. And I think some of the MFIs, look at the typical behavior that Bharat Financial Inclusion today showed, or, some of the other big names. And very clearly the effect of demonetization has already been digested. So there's not any more headwinds which you would be worried about. So that's done with. And the segment which looks at MSME lending, so there's a name like Shriram City Union Finance. Which
had excellent numbers also this time around.
And their core focus has been on this segment expressly. So I think those pockets of the BFSI vertical will probably be more promising than the banks for a while right now.
Okay, by the way, Vakrangi software is again ending 20% lower and in this week is down 42%. So that market cap, which had reached 50,000 crore, a lot of people thought had no business being there, but that one in 2 days has seen stunning losses. But we still have time for market closing. Shireen is talking to Jayant Sinha, so let's just cut across.
Well, thanks very much. Yes, we do have the Minister for State for Civil Aviation, Mr. Jayant Sinha, joining us. Mr. Sinha, I appreciate you joining us here on CNBC TV18. You gave us an indication this morning when you said that it has to be seen from a political lens, and I think which is, we've got it right when we called it the election budget here on CNBC TV18. But let me ask you specifically about your sector, sir. The Finance Minister, they're talking about 5 times upgrading of capacity so that 1 billion people can actually enjoy flying. Give me a sense of what we can expect realistically there.
Shireen, it is a historic announcement, and just to correct you, it's 1 billion trips, not 1 billion people. And really,
sorry, 1 billion trips.
Right now is we are clocking about 200 million trips. That's right. So we are clocking about 200 million trips, 20 crore trips a year for this fiscal year, which will be fiscal 18, of course. And what we have to do is we have to prepare ourselves for the future because, the long-term growth rate of volume
as far as traffic is concerned in India has been 12 or 13%. So even if we continue to grow at 12 or 13% over the next 10, 15, 20 years, we are going to get to a billion trips in a fairly conservative calculation also. And so because our airports take 10, 15 years to be brought onto the aviation network, between the land acquisition, the construction of the terminals, getting the various licensing approvals and so on, it's very important for us to plan not with a 3 to 5 year target in mind, but a 15 to 20 year target in mind. And if we are taking that kind of target, then we really have to think about a billion trips, because that is roughly where we will be.
So what can we expect in the near term, Mr. Sinha?
So that is the way we are thinking about airports. No,
so what can we expect in terms of upgradation in the near term?
No, so that's what I'm saying. Three very important elements are immediately going to happen in the near term. We will have a new and much improved regulatory framework for both greenfield as well as brownfield airports. So the OMDA agreements that we have right now will be substantially reworked, made much more predictable, much more stable, and those that we think will result in far less litigation than the existing OMDA.
Okay, just about 3 minutes left for markets to close. So let's get some final thoughts and do a recap of the market as well. So Ashwani, you said it's a draw which has been played out. Tomorrow onwards, would you want to draw boundaries? Would you want to sort of sell the rallies, buy the declines? How would you approach the market then?
See, the market remains sideways. It hasn't violated boundaries either on the upside or on the downside. It's just tested those boundaries today. So basically 27,200 to about 27,650 on the Bank Nifty, and similarly on the Nifty, say 11,000 to about 11,150. Now let's see, how tomorrow people react to this long-term capital gains after steeping over it. But definitely the gains will slow down. And the problem is that the markets ran up last year a lot in terms of mid-cap. If they don't run up from here, the long-term capital gain may not be too much. So it's important that market does very well for the government to collect money. But you have to go with the trend, and it's back to global markets. If the correction there continues, I think we will also correct with those markets.
Okay, let's just quickly recap the day then. Well, look at M&M, by the way. That's ending at 800, new lifetime high for that stock. 5% higher on that. Eicher Motors 5% higher, Bajaj Finance 3% higher, L&T 3% higher. So clearly, these are the budget stocks, or the ones where the market thought that there was clear benefit from the budget. So stocks, other stocks like even ITC, not quite at the highest point, but these stocks rallied in trade. The move in M&M, of course, was startling. 1 lakh crore market cap now for M&M. On the way down, of course, you had pharma stocks, Sun Pharma, Dr. Reddy's, Aurobindo, Lupin. What happened there? No budget move, but all these stocks were down. And banks were down. ICICI, State Bank, there were quite a bit of selling pressure over there. Maruti, HPCL, Big Boy Reliance, a couple of other stocks which were down. So final tally on the screen then, 8 points lower on the Nifty, but 200 points gone on the Bank Nifty, Surabhi, and also on the mid-caps.
Yeah, mid-caps, again, sort of cautious approach is what the market had today. So if we talk about where the money was coming off, fertilizer was definitely a space where there was profit booking. Now that the budget is done, the news is out, even though there's so much of farm focus. So you've got major cuts on stocks like FACT, NFL, Madras Fertilizers, depending on which stock you're picking up, largely lower on most of them. Actually, some more unwinding on more PSU stocks, so whether it's Hindustan Copper or BEL. There was, sort of pain seen here between 3%, 5-6%, depending on the stocks that you're picking up. Jain Irrigation was a big casualty today, 9.5%. That's more of a trading move that kind of played out. The trio of Graphite India, HEG, Rain Industries, again, down circuits on a lot of these stocks. This is where the pressure was. The interesting movers was something like a Titan, a marquee name like Titan, ending down about 5%. There was a lot of hope that there will be a gradual reduction in the import duty on gold. That didn't come through. Maybe that was part of the disappointment. Something like Gitanjali Gems is also ending down. We'll pull up TBZ for you as well. to just complete the picture. Gitanjali was down 5 to 6%, and TBZ also taking a knock of about 2.5%. Fortis Healthcare saw some more pressure after yesterday, 4% on that stock on the lower side as well. Beyond this, if I talk about the gainers, not actually all lost, because there were some interesting movers. We've been discussing insurance. So those were the pockets where the action was quite evident. You've got the likes of New India Assurance, ICICI Lombard, ICICI Pru. Most of these stocks have ended with handsome gains, 3% to 5%, depending on which one you are looking at. Great day for Manappuram, by the way. Manappuram managed to go home with gains of around 4.5% last time I checked that. So that's another mover. A decent day for tire stocks. MRF, of course, came out with numbers, kind of pulled along the sentiment on a JK Tire as well. Great numbers, sales numbers from Escorts, by the way. Some 45% increase in the monthly sales figures, and that worked very well for the counter. 8% on the higher side is how we're looking at things. So, not all lost, but largely speaking, plenty of caution in the mid-cap market, though NBFCs seem to be the winners of the day, whether it's insurance, stocks like Muthoot Finance or Manappuram. Some sign of life, Anuj, stirring in the NBFCs again.
Oh, yes, definitely. So that's the next question then, Indrajit. Do NBFCs see buying interest again? We saw, they went through a phase where there was, of course, huge buying, then a decent correction. But do you think now there's... Okay, let me pose that question to you, Prakash. For NBFCs, do you buy them at these levels then?
Yeah, so as I said earlier, pockets of NBFCs, particularly the ones that are focused on to the MSME segment, as well as some of the rural-based things. So the MFIs, for instance, will kind of come back to life. And then, so that's a very clear pocket of strength that's going to emerge with so much of money flowing into the rural economy. And as we digest the fine print, we'll be able to make out that which out of the affordable housing lenders are also likely to, get a disproportionate advantage out of this skewed spending. So this is an expenditure budget. So you'll have to see, who kind of makes the most of that part of the business rather than reinvent anything again.
Okay, gentlemen, thank you very much for being with us then and taking us through market close and budget day. Once again, to recap the tally, here's how it stands. 35,900 being just held, 35,900 on the Sensex, 11,000 being just held on the Nifty. Bigger problem for the Nifty Bank and the mid-cap. You are watching our special budget coverage. Well, the one stock that heaved a sigh of relief today, obviously, was ITC, because absolutely no changes whatsoever, not even in the minor component of taxation that the central government still is in charge of. But let's get more details going with Manglam. Manglam?
That's absolutely right, Surabhi. So a bit of a sigh of relief rally coming in, not just ITC, even the likes of Godfrey Phillips and VSC Industries, the tobacco industry itself. And that's because the street went into the budget, as always, fearing a bit of a tinkering, at least with the national calamity contingent duty, the small portion that the government still has control over. And also, there was fears of an imposition of a new tax altogether. Both of them weren't tinkered around with, so there was that sigh of relief. And the stock moved higher, as high as 5% at one point in time. But remember, now ITC, the ball moves to the GST Council's court. So there was a status quo on the budget. All eyes will now be on the GST Council meeting. Any tax increase of any more than 8 to 10% on a year-on-year basis would be, any more than 8 to 10% would be a negative. Any less than that, the street would take it in its stride and it would be a positive for ITC volumes. Just take a look at the last few trading sessions itself. In fact, the last few years, from 2011, the cigarette taxation has increased by about 202%. So any incremental increase would be negative for the volumes. But as of now, relief from the budgets and the ball moves to the GST Council's court. ITC, remember, is trading at a 50% discount to HUL's valuations, something that we haven't seen in the last 8 to 10 years at least. So the downside is limited, but then again, as is the overhang.
All right, Manglam, thanks very much for that. It's a sigh of relief for cigarette stocks today. No relief whatsoever for Titan. We saw the big blow as stock ended down 4.5–5%. And now the numbers are out and they're not looking very pretty. There's a miss on the EBITDA margin as well as the EBITDA front. Let's get more details going with Naveen. Naveen, every quarter we're used to telling us that it's your gold at the price of diamonds, but this time the sparkle seems to be a little less.
Sparkle seem to be clearly a little less, Surbi, given the fact that both revenue as well as the margins, they have been below what the street was expecting. Remember, in terms of the revenue growth, we were expecting Titan to post a consolidated revenue growth in the mid-teens, but that has come in at a growth of almost 7%. On the other hand, the margins, consolidated margins above the 10% mark, that is what the street was expecting, given the fact that for the last 2 to 3 quarters, the company has been able to do that. But on the margin front, it has come at 9.9% versus an expected 10.3%. And if you compare that with the base year, it's around 8.8%. So no great improvement is what we see. Now, going segment-wise, watches is one place where I have seen some bit of a margin improvement, but nevertheless, that's hardly 10 to 12% of the total revenues. In terms of the improvement in the jewelry segment, the revenue has grown by a meager 7%. Remember, street was expecting around 10 to 15%. Over there, that has been a miss. And consolidated-wise, I would take it as a subdued set of numbers. Expect the stock to be in the red. Also, even though the fact that today the stock was down 5%.
Okay, all right. Thanks very much, Naveen, for putting that in perspective for us. So not a great set of numbers from Titan this time around. Moving on now, let's get you more voices with the budget setting 80,000 crore rupee disinvestment target for FY19. Our colleague Sapna Das caught up with the Secretary of DIPAM, Mr. Neeraj Kumar Gupta, to get a sense of the roadmap that the government will set out for itself for the divestment drive in the new financial year.
Well, the target for this year is 1 lakh crore, and we have almost reached 92,500 crore. For the next year, the target has been set at 80,000 crore. Now, this disinvestment has to be considered purely in terms of wider concept of investment management. And there is a paradigm shift in the working of this department. We are looking into all possible options, how efficiently we can manage our investments, and while managing these investments, where all we can divest. IPO, minority stake sale, strategic sale, these are all the routes which are available, and you have seen a lot of activity in all the tracks. New financial products have been conceived. Bharat 22 came out last year. Fresh offerings may take place in both the ETFs. So these are all the tracks which are available now for divestments.
So very quickly, but kind of a sense of breakup out of this 80, how much can we expect in terms of the strategic side of it, and how much in terms of the fresh listings? And also, is there any policy on better management of CPSE assets?
Well, breakup is basically just to have a sense, but it is never so sacrosanct.
Yeah, that's true.
And the whole process is market-driven. And as the markets perform, you take a decision what to divest and which route to follow. Whereas a policy of efficient management of government investment is concerned, there are 4 tracks basically. Broadly, we are interested in creating value of our investment in CPSEs by expanding their business activities through leveraging, or maybe even permitting them to acquire economically more assets. Another is we are more investment centric now. We are looking after the interest of the investors also. You have seen a lot of bonuses, a lot of buybacks, a lot of dividend activity in the CPSE space, and this has become a very attractive asset class. Market cap of these companies has gone up, which also assists divestment process. And the third track is how best to economically exploit the potential of these companies, whether it is by way of listing or by way of divestment in the private sector, where more capital and management can come in and run them on expanded economic activity.
So will you come out with some further guidelines on this?
The guidelines are already there, and they are already focusing on these areas. Now, CPSEs have to look into how is the efficiency of capital deployment and how they are performing as per the benchmark peers in the same sector. So they have to really now come up to the expectation in terms of performance by better economic parameters and better financial outcomes.
2 quick questions, sir. The finance minister has very clearly mentioned Air India as part of your strategic divestment portfolio for FY19. What is the status on that front as of now? And second, of course, about the merger and then the listing of the remaining 3 general insurance companies. By when can we expect that? What's the process on that? You've already done 2 very successful listings of New India Assurance as well as GIC in the current financial year.
The announcement is very clear. The other 3 general insurance companies are likely to be merged, and then they will go for listing. Whereas Air India is concerned, there is a specific mention in Honorable Finance Minister's speech, and we are progressing well on that deal. We are trying to construct a good package for the market, and you have to wait for the expression of interest being invited on that deal. That will give you the clarity, but I can assure you that we are progressing. But by mentioning Air India, Honorable Finance Minister was mentioning that all those strategic divestment processes which are running concurrently, they have to be concluded for economic betterment and expansion of these companies.
He mentioned 24 of them, including Air India.
That's right. Nearly 24 CPSEs and units are under the process of in principle approval of strategic divestment.
Couple of names that you would like to share with us?
Names are very well known. There's no requirement to mention the names, but all of them are progressing well.
Well, we've been analyzing the budget right after the finance minister's speech, and here's a star panel of market experts with their opinion and views.
Fiscal slippage, I think, is perhaps a bit more than what one would have wanted. If we had come up with a 3.2 instead of a 3.3 and a 3.3, 3.4 instead of 3.5, I think the market would have accepted it much more readily. I think there was a general expectation that there would be some slippage, but this, I think, is more than what the market would have expected.
The good news, of course, is the grandfathered the capital gains up to January 30th, 2018. So that prevents the volatility. Otherwise, if direct tax changes take place after April 1st, there'll be a lot of selling in order to lock in the capital gains. So that was perhaps intelligent, but it created a huge bureaucracy back in the tax network as to what the price was on Jan 31st, when you sold, when you bought. But whatever, we have to live with it. It's not that the market can't live with the 10% capital gains. I think when the Direct Finance Committee report came out, the market could have been signaled that we're going to introduce. So this knee-jerk reaction perhaps won't be the best appreciated by the markets.
What the amount which is being done for Bharat, which is basically on the health side, for the farmers, I don't expect a very significant correction in the market, even though there could be knee-jerk 100, 200 points. But looking at the overall liquidity of the market and the earning momentum which we have seen, and this budget will certainly provide the rural fill-up which was required and which was a crying need for the last couple of years.
After the data that came out, that 3.67 lakh crores was the exempt income on account of long-term capital gains tax. At a time when everyone is paying GST in the country, a 10% tax is neither here nor there, and the market correctly has just moved on from that point of view. So, and on the fiscal deficit, I think one needs to understand that a country which had introduction of bank recapitalization and GST and was absorbing the slowdown caused by demonetization, to be able to contain the deficit at around 3.5% last year and projecting 3.3 next year, I think in a developed economy is I think absolutely fine. And the bond markets as well as the equity markets seem to have absorbed that well. So I am extremely excited about the budget.
Okay, so you heard the market verdict. Here is the verdict from the head honchos of India Inc.
I don't think it's not a slippage. I would say it is maintaining the 3.5 fiscal deficit as last year. It is not worsened. And he did say that the economic reforms are rewarding but very challenging. So it's because of these challenging, the major structural reforms they have undertaken, some of this fiscal deficit may not have been achieved. But there are lots of good news. Look at the grandfathering of capital gains tax. My fear in this is people will start selling today, tomorrow. Let me book my profits without tax. Later on, whether I want to enter the market, I will decide. But there will be a massive selling, according to me, because up to today, it's tax-free. And then one can decide what you want to do with your investments. So I think I would have preferred if the long-term capital gains tax, the period was extended to 3 years rather than 1 year. Because by no definition, long-term is 1 year.
This budget focuses on the real economy and the rural economy in particular. So if spent well, I think it can create a huge trigger on the rural side. Disappointed on the disinvestment front, because I think, as I said, that you can't time these sales based on when you are ready. You have to base it on the fact that principally or strategically, if you were to get out of certain businesses, this is a good time in the cycle. Markets and investors are looking forward.
And with that, it's a wrap on this edition of the show. We leave you with a quick recap of the Finance Minister's day so far.